Hi everyone, you are watching Commerce King Academy right now, and we are here on chapter number 6, accounting for bills of exchange. In last videos we have studied about its concepts as well as its entry, and we are here on chapter number 6, accounting for bills of exchange. In last videos we have studied about its concepts as well as its entries into the accounts of different parties with the using of accounting methods. So in last video we were on the 4 points. After drawing the bill of exchange by the drawer, he may have 4 options after accepting the bills of exchange from the acceptor. When he holds a bill of exchange in his hand, he have 4 options. We have already discussed the first option for the drawer after drawing the bill of exchange on dry, and the first option was for the drawer to retain this bill in his own possession. On due date, he will present to the acceptor or dry, and he will honor the bill and makes a payment of the bill to the drawer. We have also done the illustration number 1 with this case number 1, when a bill is retained by the drawer or the receiver with himself till the due date or maturity date. And we have relevant example, the first case have cleared in last video. So in this video we are going to discuss about second option for the drawer, which is the second option for the drawer is to discount the bill with his bank at a certain rate of discount. In this case, the bank will take the possession of the bill and on the maturity date will present the bill to the acceptor or ahead dry, and another name of acceptor is the payer of the payment and receive full amount of the bill, right? We can say simply discounting of a bill of exchange. That's it. So listen carefully again. I revise my words in very simple words for clear understanding of the students. You already know that about dryer and dry. Dry and dryer, right? Dryer is the person who draws, makes, or generate a bills of exchange or invoice of the stock which purchased by the customer, dry, acceptor or payer of the bill, and this transaction consists on credit circumstances. Both parties used two bills of exchange as a credit instrument between each other for assurance of the payment or security of the payment, that payment will done by the acceptor or payer in future or on due date. Alright. So discounting of bill of exchange from bank is the concept exists when the drawer or holder of the bill need a payment immediately, then he will get to discount from the bank and receive a payment less than the face value of the bill after deduction of the interest rate deducted by the bank. Why bank deduct the interest or discount rate? That he may wait and holds the bill of exchange till due date or maturity date, right? After understanding the logics behind the discounting of bill of exchange, now we are going toward the whole discussion about the discounting of bill of exchange for clear understanding, and after that the clear understanding the whole concept behind or whole theory behind the concept of discounting of bill of exchange from bank, we will done the illustration with relevant concept, right? So let's see here. Discounting of a bills of exchange, another use of bill of exchange by the drawer, right? When the acceptor of a bill is a reputable person, the bill is as good as money, right? And any bank will discount it. In this sentence, the writer said, when a acceptor, payer or dry of the bill is a reputable person and have goodwill in the market, his accepted bill will be as good as money for the bank, and any bank will discount it conveniently. Alright? If the drawer of the bill does not want to wait till the due date and is in need of money, right? He may sell his bill to a bank at a certain rate of discount. The bill will be endorsed by the drawer with a signed and dated order to pay the bank. Alright? The bank will become then the holder or new holder and owner of the bill. After getting the bill, the bank will pay cash to the drawer equal to the face value less interest or discount at an agreed rate for the number of days it has to run or wait. Alright, this process is known as discounting of a bill or an invoice. In this paragraph, the writer said, we can say or understand in simple words when a bill is accepted by the acceptor, right? And the drawer of the bill will go to discount from the bank for discounting the and need immediate payment. So the bank will discount after deduction of the discount rate or interest rate because he bear the bill till the due date, right? For example, a drawer has a bill for 10,000 rupees. He discounted this bill with his banker 2 months before its due date at 15% per annum rate of discount. Discount will be calculated as under. Alright? In this sentence, the writer said a drawer got to discount the bill from bank. The bank say to the drawer, we deduct 15% per annum. Per annum means we understand the per annum rate or annually rate, right? So we will consider 12 months in a year. Alright? So it will be each month 15% deduction will done by the bank. Alright? So drawer contract before 2 months, right? So 2 months interest will comes to an existence. 10,000 is the actual amount of the bill of exchange or invoice. So multiplied by 15% interest rate multiplied by 2 over 12 because 2 months interest will apply on whole amount of the bill. So the 250 amount, right? So this amount will deduct from the face value of the bill. Alright, after deduction of the discount rate or interest rate, the drawer will receive cash worth rupees 9,750 and will bear as a loss 250 rupees which deduct by the bank. Okay, and further the bank will keep this bill in its possession till the due date and wait for the maturity date. Alright. On maturity, the bank will present the bill to the acceptor and will receive cash from him. If the bill is honored, in case the bill does not make payment to the bank, then the drawer or any person who has discounted the bill will have to take this liability. He will pay cash to the bank. Alright. So the first liability or temporarily liability in eyes of the bank will be the receiver of the discounting bill. Okay, we can say above drawer or any person who discount the bill. Okay, in case of dishonored of the bill by the payer. Alright, understand? Discounted bill is a contingent liability of the drawer. So what is contingent liability? Contingent liability is the liability which fall in if and then condition. Right means of contingent liabilities is here. Contingent liability come into existence when dishonored the bill by the acceptor or payer or drawer of the bill. In case of dishonor, the amount will pay first the drawer who discount the bill from the bank. Clear? Therefore, we see that until a bill is honored on the due date, there is always a chance that drawer will become liable on the bill. It's very simple because when the bill is not honored till the due date, same time or that times the liable for the bill will be the drawer or holder. The holder or drawer is the person who got discounted recently the bill of exchange from the bank. Clear? This is called contingent liability of the drawer, right? A liability that will only arise if a certain event occurs. The acceptor does not honor the bill. I said earlier, in case of dishonor of bill of exchange, the drawer will be liable to pay the payment to the bank in case of dishonor by the acceptor or drawer. Alright? And after that, the drawer will claim the payment from actual acceptor or drawer. Alright? So you can say this diagram of discounting of bill, and you may have more clear understanding about this concept. Bills of exchange draws between two parties, drawer and drawer. Are you clear? After making acceptance by the drawer of the bill, after making signature and stamp, he will return the bill to the drawer. After making acceptance by the drawer, the bill makes for the drawer bills receivable or an asset. When, on the other hand, the bills payable come into existence for the drawer in future date. Alright? After that, drawer discounted the bill for rupees 9,750 and suffered as a loss of 250. Listen carefully, 250 is a loss for the drawer. On the other hand, will be profit for the bank as a discount rate or interest rate. Right? So, bank takes possession of bill when drawer get discount from the bank. And ultimately, on maturity, the bank presented the bill to the acceptor and received cash. That's it. All the process of discounting of bill of exchange has been completed here. Now go ahead. When a bill is discounted by the holder, the following entries are passed in the books of drawer, and bank. Obviously, three parties comes into existence when bill got discounted by the drawer, and bank. And same as we will done the entries in third party's journal. So let's get started. On the next page, when the bill is drawn by the drawer, Mr. A, and is accepted by the Mr. B, drawer of the bill, then the entries would be in drawer's journal, Mr. A journal, bills receivable account will debit to B account is credited. B details acceptance received and makes bills receivable as an asset because drawer will receive the payment of the bill in future or maturity date. On same date or immediately, Mr. A drawer needs to payment immediately. That's why he will go toward the bank and will say to the bank, discount the bill of exchange and give immediate payment after deduction from the face value, discounting rate or interest rate. Clear? So the entries will be when got discounted bill of exchange from bank into the journal of drawer's journal. When a bill is discounted at a bank's or discount houses, so the bank account will debited here, and also discount account will debited here, and bills receivable account credited here. Because decrease in bills receivable account and increase in bank account, this entry will say compound entry because compound entry is the entry which holds more than two accounts. Alright. So the discount account is the expense for the drawer with details or description bill discounted at the bank. That's it. When we will go toward drawer's journal, so the entries would be A's account debited here against to bills payable account credit, right? With details acceptance given by the drawer to the drawer. Okay. So bills payable account is the liability of the drawer because in next dates he will pay to drawer or Mr. A. Okay. So no journal entry as the acceptor is not concerned. Why? It's not concerned for discounting of bill of exchange from bank. Alright. The entry for discounting of a bill in Dreyer's journal shows increase in Dreyer's bank balance at present value, face value minus discount given, and increase in a loss discount given and decrease in an asset bills receivables. This paragraph or sentence said to us, which I said earlier about Dreyer's journal, bank account increased by cash of the dryer, so will debit it, and discount is the expense for the dryer and also debit, and bills receivable account is the decrease in assets, so will be credited in the account of Dryer's journal. Clear? And same as above, in the journal of banks, the entries would be bills receivable account will debit. So also bills receivable account will asset for the bank and will received by the bank in future or maturity date with face value of the bill. Are you okay? And to credited two accounts having compound entry for the bank, so Dryer account will credit it with present value of the bill. Okay? Present value is the value which deduct the interest or discount rate amount. Alright? And discount will revenue or profit for the bank. Therefore, it will be credited for the bank. Discount received for the bank. Alright? This is the explanation of above entries. You can see this journal entry indicates increase in assets bills receivable in the bank. Alright, which I said because bill receivable is the asset for the bank and will receive in future or on maturity date. Alright, and increase in liability the amount transferred to Dryer's account. Therefore, the Dryer account will be credited because it will be the liability for the bank in next date. And also increase in revenue for the bank. Discount account is the revenue for the bank, therefore it will be credited in the account of bank. Are you okay? When the bank presented the bill to the acceptor on maturity date and the acceptor meet his obligation, the following entries are passed. This sentence shows the bill is honored by the acceptor on maturity or due date. Alright. So the entries will be in different parties' account. When we will talk about the Dryer's journal account, no entry as he has already received the money from the bank. The account has been closed of the Dryer. Okay. When we will talk about Dryer's account or journal, so the entry would be bills payable account debited by cash account credited. With details or description, acceptance honored and cash paid to bank on presentation of the bill. That's why decrease in the liability so will be debited, bills payable account will debit, and decrease in cash so the cash account will credited. Third party is the bank's journal account. Are you okay? So the entries would be cash account debited here to bills receivable account credited here, because bills receivable account was the account receivable for the bank. The account of bill receivable has been closed here after receiving the cash by the bank from the acceptor or payer or dry of the bill. Alright. With details or description, cash received from the acceptor equal to full value of the bill. We have this illustration with relevant concept which we have discussed above. This is the illustration number 2. So let we solve with same concept when a dryer goes or get to Bird Bank for discounting. Alright. So Amjad sold goods to Sohail worth rupees 15,000 on 1st January 2005. Amjad is a seller manufacturer who want to sold goods to Mr. Sohail. Mr. Sohail is the customer, dry and acceptor of the bill of exchange amounted 15,000. Right? So on 1st January, this transaction held on credit basis and use both parties as a credit instrument to bills of exchange. Alright? You must keep in your mind here the bills of exchange used between the parties just in case when credit transactions comes into existence. All right. So after making transaction between each other, and next point is he drew a bill on Sohail for rupees 15,000 on same date. Understand? Payable after 3 months. Sohail accepted the bill and returned it to Amjad. Alright? Don't forget this point. Return to dryer by dry when dry makes his signature and stamp on the face of bill of exchange, and then on 4th February 2005 Amjad discounted the bill at his bank at 15% per annum interest rate. Alright. On the due date, the bill was honored by the acceptor. Show entries in books of Amjad, Sohail, and the bank. So you understand, before solving to this illustration, a short summary of the question I discuss. Amjad is a person who manufacturer, seller, who sold goods to Sohail on credit basis amounted 15,000 on 1st January 2005, and Mr. Amjad drew a bill on Sohail for same amount on the date payable after 3 months. So 1st January, February and March, 3 months duration of the bills of exchange between the parties. Alright, and after setting the duration, Sohail is a customer or acceptor or payer of the amount, accepts the bill, making acceptance with its stamp and signature. After making acceptance, he returned the bill to Mr. Amjad, which is the dryer of the bill manufacturer or seller. Alright. So on 4th February, after 1 month issuing of the bill of exchange, Mr. Amjad go toward bank and said to bank that discount the bank, and bank said to Mr. Amjad he will receive on 15% per annum interest rate for discounting of bill of exchange. Alright. So the 15% discounting or interest rate will be the expense for the dryer to or Mr. Amjad, and the 15% discount or interest rate would be for the bank as a revenue. Alright. So on the due date, bill was honored by the acceptor. The acceptor was Mr. Sohail, and he honored the bill on maturity or due date, and bank receive whole or face value from Mr. Sohail, and therefore all the operations of these credit transactions including bill of exchange transaction has been closed here. So the requirement is this of this illustration that shows entries in 3 parties: dryer Mr. Amjad, dry Mr. Sohail, as well as the third party, the bank. So let's get started. After understanding the complete concept or as well as a requirement of illustration number 2, which is related to the second point, which is bill of exchange discounting from bank. Alright, so let's see here. This is the solution of illustration number 2. Illustration number 2 includes 3 parties. First party is Amjad's journal. Actually, this is the account of Mr. Amjad. Amjad is a dryer, maker of the bill, and as well as supplier or seller of the goods. Alright. So entries would be in this account in this way. You can see here on 1st January 2005, this is the date of selling and making of bill of exchange date between the parties. Alright, so Mr. Amjad sold goods to Mr. Sohail amounted 15,000 rupees. So the journal entry would be of this transaction: Mr. Sohail account debit to sales account credited here with same amounts, debit and credit, with details or description: goods sold for 90 days credit. Alright, you must keep in your mind sales always will be credit in journal account. And on the same date, Mr. Amjad drew a bill of exchange on Mr. Sohail. So entry would be of this transaction will be on same date, 1st January 2005. Bills receivable account will debited here with same amount 15,000 to Mr. Sohail account credited here with details or description. Acceptance received at 3 months. So bills receivables account will debited in journal of Amjad because bills receivable will be asset for Amjad because he will receive amount in future date from Mr. Sohail. So what happened next? Mr. Amjad, which is the drawer of the bill of exchange or maker of bill of exchange, not wait till maturity date, and then he will get toward bank for discounting of bill of exchange. The date is 4th February 2005. Alright, same as the bank will charge the interest or discount for 2 months, February and March. So let's discuss the entry. So the entry will be bank account debited amounted 14,625. This amount extract from this calculation. This is the amount of bill of exchange 15,000 multiplied by 15 over 100. That means 15% of 15,000 rupees. Alright, and multiplied by 2 over 12. That means just 2 months interest or discounted rate. And ultimately we have this amount by this calculation 375 rupees. This is the amount of interest or discount which deduct by the bank. Alright, so this amount we will deduct from 15,000 and we have this amount 14,625. Okay, so this amount will direct deposit into the Amjad account. Alright, therefore the bank account will debit into the journal of Amjad, and discount account will also debit because this amount will be the expense for the Mr. Amjad. Alright, and bills receivable account will credit it with full amount 15,000. Why? Because this is the decrease in total asset which was 15,000 rupees for the Mr. Amjad. This entry will called compound entry. Why? Because this entry holds more than 2 accounts. Okay, with details or description, the bill was discounted at 15% per annum and bank balance increased equal to rupees 14,625. This one, right? After got discounting bill of exchange from bank, the bank balance of Mr. Amjad's journal is this. Okay, now we will move toward our next party journal's account, which is Sohail's journal. This is the person who purchased the stock or goods from Mr. Amjad and makes acceptance of the bill, making signature and acknowledge or liability to honor the bill on maturity or due date. Alright, on same date So the purchases account will debit in the accounts of Mr. Sohail on date 1st January 2005 amounted 15,000 rupees to Amjad account credited by 15,000, the same amount as debited, with details or description goods purchased for 90 days credit. So the purchases account is the asset for Suhail, so debit, and the Amjad account is the liability for the Suhail, will credit. Alright, when he makes purchases and also make the acceptance and return the bill to Amjad and makes signature and stamp on it, so the entry will be on same date 1st January 2005. Amjad account will debited here to bills payable account credited with same amounts debit and credit, with details or description acceptance given at 3 months. After making acceptance will decrease in liability Amjad account, so Amjad account will debit here, and increase in liability bills payable, so will credited here and will pay in future date after making acceptance. So on date 4th April 2005, so on date 4th April 2005, this is the date or maturity or due date of bills of exchange. So Mr. Suhail honored the bill on this date. Alright, so the entry will be in case of honor of the bill, so bills payable account debited with same amount 15,000 and to cash account credited here with 15,000. Alright, with details or description acceptance paid on presentation by the bank. So decrease in liability, which is bills payable account, will debit here, and also decrease in cash will credited by Mr. Suhail. Alright, so this is our last party of bill of exchange, which is bank. So bank's journal, we will make entries in this way. You can see here on date 4th February 2005, Mr. Amjad discount the bill from bank. So in this situation, the entry would be in the journal or books of bank, bills receivable account debit to Amjad account credit with this amount, and discount account also credit with this amount. Alright, with details or description, bill was discounted and the present value 14,625 was transferred to Amjad's account. Okay, with bank's point of view, understand this entry bills receivable account is debited here. Why? Because bills receivable is the asset for the business, because it will receive in future date from Dry or Mr. Suhail. Okay, you can see as above. Alright, with same amount 15,000 rupees, and to credit Amjad account, bank pay immediately to Amjad after deduction this discount or interest amount. Bank pay to Amjad the amount this one 14,625. Okay, so will credit, because this is the liability of business, will credit. And when we will talk about discount or interest account, so the bank will credit this account. Why? Because it will be the revenue for the business, which is 375 rupees. Understand? So this is the last entry of this illustration. When bank receive the payment from Mr. Suhail, which is the dry or acceptor or payer of the bills of exchange. Alright, so in this situation or circumstances, the entry would be on date 4th April 2005. So cash account debited here in the account of bank amounted 15,000, and bill receivable account credited here with same amount 15,000, with details or description received the full value of a bill from acceptor on due or maturity date. One thing you must keep in your mind here about this entry, the bank will receive the full amount of bill of exchange or face value of bill of exchange. Alright? And another concept, with the issuance date of the bill of exchange, which was 1st January 2005. Okay? With this date, the maturity date after 3 months would be or will be 31st March 2005. Okay? But Mr. Amjad, which is the drawer or first holder of the bill of exchange, gave the grace period to Mr. Sohail, the days 4 days, as a grace day or relaxation day for making payment. Alright? Therefore, the payment would done by Mr. Sohail to bank on 4th April 2005. Alright? So dear student, we have completed the concept of discounting of bill of exchange. We have discussed in this video the second point or opportunity for the drawer. Am I right? Which is discounting of bill of exchange. And we have cleared this whole concept as well as its diagram or structure of three parties which involves in discounting of bill of exchange, and as well as we have done its simulative transactions entries into the both parties journal as well as into the bank's journal. And we also completed illustration number 2. This is the relevant illustration of this concept. And if you have any ambiguity, please contact in comment section, and you may have contact with WhatsApp number. So we will see in next video with third option for the drawer, third option or use of bill, which is endorsement. And same as we will discuss its concept and examples and illustration. Alright? So if you like this video, then don't forget share, subscribe and comment. Thank you all.